Hey guys, so here is a quick little intro into what I use to track stocks every day and a little bit of insight into my thinking and methodology. So I'm in Yahoo Finance, and in Yahoo Finance I've compiled a list of different stocks, different companies, primarily US, but some Canadian, by ticker symbol. The ticker symbol is what you see on the left, like WMT for Walmart, or HD halfway down for Home Depot right here. And they're in a health and retail category. If we scroll down, have another category called transport, where I have Canadian National Railway.to. Anything with a .to is on the Toronto Stock Exchange, so it's in Canadian dollars, whereas the others are in US. JBHT, JB Hunt, a trucking company, transport company, in US dollars there. And then oil and a number of different ticker symbols underneath that, as well as this one, CL equals F, which is crude oil, and shows you the price of crude at this current time and how it's trading. And then tech and a bunch of technology companies, as well as some, we'll call them ETFs or index funds. Near the top, the AIQ and the QQQ and the VGT, the Vanguard Information Technology ETF. And then a bunch of other tickers for example, NVIDIA, Netflix is in there, Google, GOOG. You can see, and then broken into some other categories. Banking is one of my other favorite categories. And then I've got some pretty big name banks, investment banks, banking organizations within here. So this is what I look at on a daily basis, usually multiple times throughout the day, depending on what's going on. But the first place I start is up here with the indexes. So looking at what the S&P 500 is doing, what the Dow 30 is doing, whether it's green and moving upwards or red and moving downwards. I'm not that interested in the Canadian US exchange. I'm interested when I'm looking at oil stocks and what crude oil is doing and where it's moving. Bitcoin's just in there, and crypto, gold, the Russell 2000, which is more small caps, bonds, not that interested, and then the NASDAQ, which is tech stocks. The other thing I'm interested in is the VIX, which is the volatility index. And the volatility index, we'll talk about that as we go forward in these kind of sessions, but that's something I keep an eye on just to see whether it's moving or not. So the mindset that I have when I approach trading stocks, and I'll just use Morgan Stanley, which is down in my banking stocks here today, as an example, is I'm just trying to make a small percentage, like 0.5% to 1% in a trade. Because my thinking is if I can make 0.5% to 1% on every trade, and I can do that 20 or so, or 40 or so, or 50 or so times a year and make that 0.5 to 1%, I'm going to make anywhere from 25 to 50%. And that's been kind of what I've set out as a goal, is 18% on a go-forward basis or an annual basis. And that typically doesn't include dividends if you hang around for a dividend, if the stock pays dividends. So looking at Morgan Stanley and using this as an example, if we show you the 5-day chart, what I'm looking for is well-run companies, usually large cap stocks, so in the billions of dollars of revenue, high volatility. And where you can see volatility is if you scroll down and look for volume here, you can see that, I think I clicked on the wrong spot. You can see the volume of which is the number, here we go, volume, the number of shares traded. Average volume is 8.91 million shares per day are traded. So this has a great deal of volume. It also has a dividend. So the forward dividend and yield is $3.4, $3.40, or 3.7%. And it has earnings coming up on the 16th of January. So that's interesting because around earnings times, there's typically volatility as well, and things can spike or go down depending on the earnings announcements and how the company does. You can see on these little scroll wheels here under key statistics, the day range, so how much it's moved during the day, went down as low as 91.66 and went up as high as 93.14. And then you can see the 52-week range. So it's not trading at its high, which is around $101. It's also not trading at its low, which was around $69.50. So it has a little bit of movement. And what you can see here over 5 days is this stock has actually gone down in value, but I've made money on the stock because I bought it at troughs and I've sold it as it got up to peaks. Now, I haven't hit the bottom, and we're never trying to hit the bottom and hit the top, because that's something that's extremely difficult to do, and it's not really important to do. The key is, it's like going to the mall to buy something. You want to buy something when it's on sale, and then you want to sell it or take it back and return it when it's at retail cost. Now, I know it doesn't work that way in retail, but imagine if it did, where you could go to your favorite store, you could buy a pair of pants or a sweater or a shirt on sale, and then 2 weeks later, when the sale's done, you can go back and return it and get retail price, right? That's basically the strategy here, to make 0.5% to 1% on your trades. Now, based on the amount that you're trading, the dollar amount, you have to factor in your commission costs. So I don't know what platform everyone's using. I use TD. I'm a fan of TD. I've used it for years, and I pay $7 a trade. So I've got to pay $7 to buy it. I've got to pay $7 to sell it. So I need to make sure that it goes up at least $14 for me to break even. Hopefully it goes up a lot more, and then whatever above the $14 it goes up is my capital gain, and I'll have to pay tax on that at the end of the year. I may also get a dividend at some point, and we'll get into that in a different conversation. This one, as you can see, Morgan Stanley, is 12 days to earnings. So there's typically a little bit of fluctuation, first of all, at the beginning of every year as we go into the first trading week, which is this week, but then also ahead of earnings season and at earnings day, particularly when earnings are announced either before market opens or after market closes. The markets open at 9:30 a.m. They close at 4 p.m. So earnings are always done either pre-market or post-market. And there's a small amount of volume that happens during those pre- and post-market times. We'll get into that in a different conversation. But what we really want to focus on here is just looking at the volatility of a stock. And you can see the movements down from as low as 91.27 up to as high as 94.15. So there's effectively $3 spread in there, we'll call it, round numbers. And that's where we can make a small amount of profit, but we can do it on a repetitive basis. And that's how we can make money in the stock market. And we can still participate with good companies and owning those over a long period of time. We just don't own them consistently over a long period of time. We're trading in and out of them. And that's the philosophy that we're going to have a look at.